Welcome and thank you to coming to the second BJPR Roundtable of the day after the first one on UK devolution this afternoon. I'm Andrew Baker, the current editor of BJPIR, and this roundtable is called The State of UK Political Economy. Each of our panellists are going to speak for around 10 to 15 minutes, and then we'll have up to 30 to 40 minutes discussion. Sorry if the standing room only at the back. We had a last-minute timetable change and we got moved here, and that's the reason for the shortage of seating. And I wasn't envisaging quite as many as this, but nevertheless, thanks for coming anyway. Before I introduce our panellists, I just want to take the luxury of saying one or two words about the thinking and rationale behind this round table. In the UK, there's a very real danger that we're about to ignore Niccolò Machiavelli's excellent advice and waste the opportunity afforded by a good crisis. And this, I think, may be particularly true of the UK political studies community. I don't think political scientists have had anywhere near the impact on wider public debate and discourse about the economic crisis, what to do about it, and what comes afterwards. A great pity, because as Andrew told us very eloquently in his book, financial crises are always political moments and social events. As a PSA journal, I think BJPR has a duty and obligation to promote and support the profession as best we can, which is why we think that the launch of the Sheffield Political Economy Research Institute is a very promising development that should be encouraged, promoted and publicised to the wider profession. It potentially offers a vehicle for political science and political economy to have a genuine impact on crucial questions. Colin Hay will speak more about this and speak more about the launch of SPERI. He will be the director. And Andrew Gamble, of course, was the original director of the Political Economy Research Centre. And SPERI is, in a sense, a reincarnation of this. And part of SPERI's agenda will be to ask what the post-crisis economic model should look like, what it could look like, and how we get there from a political perspective, and the challenges and obstacles that raises. These are big, important questions. The political science community should have an impact and an influence. SPERI provides a potential vehicle for that, and this is our way of supporting them and publicising those worthy endeavours. So our panel is Colin Hay, who needs no introduction. He'll be the director of SPERI. And of course, his most recent books, Why We Hate Politics, is a key theme of the conference. Andrew Gamble, again, really needs no introduction, a very long and distinguished career covering areas such as Marxist theory, Hayek, Thatcherism and Anglo-America. And his most recent book, The Spectre of the Feast, it puts the crisis into some sort of historical perspective. Helen Thompson is a colleague of Andrew's from Cambridge. She's working on the problem of debt in historical and comparative perspective. And Helen will be one of the keynote speakers at SPERI's launch event. Finally, Bob Strong. Bob is from Belfast, but he isn't just some random bloke that I've invited in off the street. Bob is the director of Advice NI and the chairperson of NICFA, the Northern Ireland Council on Voluntary Action. And the voluntary sector in Northern Ireland has been one of the most vocal and politically proactive actors, contributing to debates on economic policy questions and forwarding alternative economic thinking. So Bob is going to give us a street-level perspective from some of the things taking place within this city and the problems, challenges and opportunities that presents. So I'm now going to shut up and hand over to Colin to get us underway.
Firstly, I want to thank the BJPIR and thank Andrew in particular for organising this panel. It's kind of rare to get the opportunity to almost kind of promote the research institute one's responsible for co-directing, in fact, in a plenary session at a conference. I feel slightly embarrassed by that, so I'm not going to turn this into an advert for SPERI at all, save other than perhaps to say that SPERI's aim really is to bring the strengths of UK political economy, academic political economy, to bear on the weaknesses of the UK political economy. Central to that is the problem of growth, and it's the problem of growth that I want to sort of talk about this afternoon. We see SPERI's concerns and approach, and the approach we adopt to such concerns, as reflecting a distinctive UK, perhaps European, political economy tradition. Rather at odds, perhaps, and perhaps even increasingly at odds with much of the North American mainstream. So what I want to kind of start with is a few reflections on political economy, UK political economy, before I turn to how that UK political economy, European political economy, might inform an account of the UK political economy today. That European tradition, I want to argue and have suggested elsewhere, is perhaps rather good in a crisis. Because its analytical disposition, as distinct from that of much mainstream economics and mainstream North American political science, is not to pretend that crises don't happen analytically. This gives it a comparative advantage, at least today, in its focus on dynamism and political contingency, its interest in disequilibrium dynamics, and in a sense its rejection also of the probabilistic defense of equilibrium assumptions, that because equilibrium is around more of the time, we should study it, it's more important in some sense. Its rejection also of the idea that institutional complementarities are necessarily equilibrating, and even if they prove equilibrating in the short run, they may be disequilibrating in the long run. And its associated rejection of the kind of varieties of capitalism line that comparative advantages are institutionally given. So in a sense, my challenge is to begin to show how some of that might be put into practice in informing an account of the predicament of the UK political economy today. That said, what I want to offer is less a SPERI view, because we're in the early stages of developing that, than at this stage, I think, very much a personal view. It's taken a while, but I think we now have a consolidated crisis discourse in Britain in response to the seismic events of 2007 to 9. That is clearly a crisis of debt discourse to which the response is austerity and deficit reduction. That discourse is proving paradigm reinforcing rather than paradigm threatening. In what follows, I want to consider the appropriateness of that kind of a crisis discourse, arguing that an alternative crisis of growth discourse is at least as compelling, would point in very different policy directions, and generate rather different expectations about the effects of deficit reduction. That kind of a discourse, I want to suggest, can just about be discerned, especially if you want to look for it, in the growing criticism of the government's austerity programme, and I explore the implications of both the crisis discourse, or both these crisis discourses, for responses to the crisis, concluding with an assessment of the prospects for the return to growth under a revised, rebalance, or new growth model in the years ahead, the really difficult bits. Okay, I might have run out of time before I get to that bit, we'll see. Although I think it would be wrong to suggest the open clash of competing crisis narratives that many predicted, Labour does to some extent clearly counterpose, and has for some time, a Tories cuts discourse to the coalition's Labour's debt discourse. The former might be taken to imply, for reasons I'll come on to in a moment, an understanding of the crisis as one of growth rather than of debt. Yet thus far at any rate, that alternative crisis discourse has remained largely implicit. But the point is that since the election, Labour has come to understand the crisis differently from the Conservatives in ways that are crucial to how we should respond to it. To see how it's useful perhaps to tease out the implicit premises of Labour's Tories cuts discourse. They are, I think, fourfold. That cuts on this scale and at this pace are unnecessary and hence a political choice or expedient rather than an economic imperative. That things would be different were Labour exercising that choice. The cuts on this scale and to this time frame are not only unnecessary but damaging. And finally, and more politically, the deficit reduction is in fact a foil for a Tory rather than a coalition ideological offensive on the public sector. In the present context, it's the third of these that's perhaps the most important because it suggests a still yet implicit crisis of growth discourse. Only time will tell if this crystallises into a more obviously Keynesian alternative crisis discourse, and sceptics might suggest that it's had plenty of time to do so already and it hasn't, but arguably there is still some potential for it to do so, especially once the effects of public spending cuts start to become perhaps more evident. Here it's worth noting that on IFS projections, thus far only 6% of planned cuts in current public service spending will have been implemented by the start of the 2011-12 financial year. Okay. Such an alternative crisis discourse might build from the fiscal origins of Britain's current predicament, noting perhaps that 70% of the current account deficit in 2008-9 and 80% or so in 2009-10 can be attributed to the reduction in the size of the tax base associated with falling economic output. Put in those terms, deficit reduction is recast as an acceptance of, even a capitulation to, the idea of Britain as a smaller economy, an economy which can and will no longer be assumed able to afford the public sector to which it had previously become accustomed. No less significantly, such an alternative understanding of the crisis would generate different expectations about the likely consequences of deficit reduction. And it would not be difficult to put such divergent expectations to the test publicly, in a sense. If rapid deficit reduction did indeed produce negative growth, then it would be far easier to discredit both the policy and the economic theory on which it were predicated, if the consequences of deficit reduction were politicised in that way. But that looks more like an alternative political strategy than it does an alternative economic strategy. But it's not, I think, impossible to imagine what the basis of an alternative growth strategy for the British economy might begin to look like, with perhaps the channeling of credit out of the housing market and into what might be identified as strategically significant and export-oriented sectors of the economy. But the point is that there's been, to date, very little public discussion of the options available, little academic or other preparatory work to draw on in developing those kind of strategies, and whilst the growth dividends from such a strategy might be considerable, they are unlikely to come on stream in the short term. Genuine comparative advantages are not easily or rapidly acquired, especially in a world economy recovering only slowly from coordinated recession. And that's typically where analyses like these stop. And in a sense, SPERI is about what happens when you start the analysis at that kind of point. So in the few minutes I've got left, I want to begin to look perhaps at the question of growth, the impediments to growth, as directly as possible. This is difficult, and in a sense I may get it wrong, but I think it's above all important that we begin that task, and we do so collectively, and we do so through some kind of a dialogue. So I'll begin with the impediments to growth, perhaps. The first relates to monetary policy, and the point here I think is a simple one. The dependence of the old, as it's sometimes called, privatised Keynesian growth model on private debt increased the sensitivity of demand in the economy to interest rate movements, and in the process the threat to growth posed by inflationary pressures. That problem, though temporarily suspended during the crisis, is now, and indeed has returned again with a vengeance, bringing with it a return to the condition of stagflation from 2010 that the economy experienced from late 2007. Of course, the last time this arose, here in a sense is the problem, the Bank of England was incapable of controlling inflation without crashing the housing market, and its highly accommodating monetary policy stance since 2010 would appear to indicate that it is no more confident of being able to do so again today. It need hardly be pointed out that the housing market is a much more fragile entity today than it was in 2007, and oil price-related inflationary pressures are hardly dissipating. This is compounded by a second factor, the size of the mortgage and commercial lending spreads which opened up during the crisis. Though not much commented upon, these have yet to close up again in the way that interbank lending rates did. It's become more costly to borrow at a given base rate. The AIB's current variable rate mortgage in the UK is 5.5%, 11 times the base rate. In other words, the monetary authorities have allowed the banks to pass on a significant cost of their recapitalisation to borrowers, suppressing both consumer demand and investment in the process. And this is now arguably also interfering with monetary policy, since the effective base rate is far higher than 0.5%, and base rate movements are arguably a less effective instrument of monetary policy. But the key point is that for so long as commercial and mortgage lending rates remain punitive, investment is being crowded out in effect by bank recapitalisation. Okay. A final factor relates to the difficulty of resuscitating the old growth model. The problem here is a long-standing, indeed an intergenerational one. Sustained house price inflation at 10% per annum over a number of decades was always going to create a crisis of affordability for new entrants into the housing market at some point. That point was brought forward dramatically by the crisis, but in a sense, this intergenerational crisis of affordability would have happened anyway, and it's now compounded by a step-level increase in the cost of mortgage lending over the base rate and the increased levels of personal debt that will follow the withdrawal of state funding from higher education. So the point in a way was that privatised Keynesianism was in one sense a busted flush at some point anyway, though that of course was accelerated significantly by the crisis. So where does this leave us? Where does this leave us? Again, all paths seem to point to a somewhat inevitable conclusion, the need for an alternative growth model. But even assuming one could be found, there are significant problems. The first of these is associated with the cost of capital. As I've argued, despite an unprecedentedly low base rate, credit is today being rationed through punitive interest rate premiums, and this is crowding out investment. And the problem is compounded by the drop in the value of the commercial property against which many commercial credit lines are secured. Some policy implications follow from this. First, if the economy is to be rebalanced, a term that all the principal parties use, then the government and the Bank of England need to be putting concerted, if selective, downward pressure on the actual cost of borrowing, independent of the base rate, in sectors where a clear link to the growth strategy for the economy can be made and sustained. Second, there is a strong argument to be made for public investment in support of a clearly articulated growth strategy built on identifying and supporting growth in a series of key export-oriented sectors. Apart from anything else, the cost of financing long-term public borrowing is significantly lower than that for commercial loans. But we need to be sanguine. A manufacturing and export-oriented rebalancing of the UK economy sounds fantastic, but it's not at all easy to achieve and would in all likelihood take decades to yield a clear growth dividend. It can only ever be part of a new growth strategy. And there are clear policy implications, I think, for this too. Important though the manufacturing sector is likely to prove in a reorientation of the British economy capable of generating sustained and sustainable economic growth, it would be naive to see it as a potential fount of British growth in the decades ahead. It is at best part of a long-term strategy. Secondly, in the interim, the British economy will need to make do with a growth strategy that looks rather more like the old one than might seem ideal. That in turn has further implications. It suggests that the Bank of England's currently highly accommodating monetary policy stance is right, but perhaps too limited in its ambition. At minimum, it needs to be allied to a deficit reduction strategy made conditional on growth. And fourthly, the British economy needs a far more selective and strategic channeling of the supply of credit out of the housing market, whose growth in the long term was unsustainable anyway, and into new sources of growth in manufacturing and services. That entails not just an accommodating monetary stance, but a focused assault on interest rate spreads in areas identified as targets for investment in the new growth model. And that in turn implies a refocusing of the public assault on the banking sector. Investment banking, though an easy target, is certainly not the only target here. Taken together, these observations suggest once again the difficulty of the task that British policymakers face in the years ahead. Britain has lost the growth model, as in their different ways all of the principal parties now accept, but it is yet to find an alternative, and the transition to one, if, as and when one can be identified, is unlikely to prove rapid or painless. It really is that bad, and it's likely to get worse before it gets better. Thank you very much.
Okay, so this is the cheerful bit. I've been asked to talk about the what kind of crisis it is, and also what the political implications are. So, two rather small problems. First of all, what kind of crisis? I think we still don't know. Is the answer? We're still in the midst of it. Whether this is a crisis of a rather small scale, like the dot-com crisis or the Asian financial crisis, or whether it's a crisis much longer lasting, like the crisis of the 1970s, or even whether it's on the scale of the 1930s. Those are the sorts of issues which are being debated. Economists have this nice group of letters, V, W, U, and L, for describing the shape of recessions. Well, V's are the sort of recessions everybody wants to have. They're short and sharp, but we're clearly already beyond a V-shaped recession. We seem to be into a W-shaped recession, which is where there are weak rallies, but the overall tendency is deflationary. And you can tell that we're in that sort of, at least in that sort of situation, because the pre-crisis levels of output haven't yet been regained. The third type of recession, the U recession, is a long period of bumping along the bottom, and that's not impossible, and there is recovery at the end of it. The final one, the L-shaped, of course, there's no recovery at all, and indeed the L can even sort of can even start sloping downwards. That's very, very gloomy. Let's move on quickly. There are lots of different ways of thinking about crisis, and lots of disagreement about whether particular events are crises or not, should be designated as crises. Crises clearly are not natural events; they're always social events. That's to say that they always have to be constructed through some kind of discourse. They have to be perceived as crises and experienced as crises, otherwise they're not. But the problem that we have is that within everyday discourse we have a use of the word crisis which is now almost ubiquitous, which reduces crisis to very trivial events. So the crisis has come to mean simply a stressful situation, and so that there are the media talk about crises every day of the week, and there's a succession of crises. It's a sort of in the thick of it view of politics. But there's two other much more interesting uses of crisis which are in the social science literature. One is the idea of crisis as a moment of danger, as a critical conjuncture, which has the idea that the moment of crisis also leads to some kind of resolution. And this idea of crisis, which is very agency-centred, is drawn from medical analogies and drama analogies, where in medicine the crisis being the turning point in the progress of a disease, which is decisive for either recovery or death. And that notion of crisis is very important within political science in lots of different contexts. It's been used, of course, a lot in the security field. But then the third idea of crisis is the idea of structural crisis or deep crisis. This is more a metaphor about tectonic plates, which grind very slowly and but can lead to sudden eruptions, which are very hard to predict. In political science terms, at the heart of this conception is where the politics is in deep crises or structural crises, is that they consist of a set of impasses or deadlocks, which can be described, but the ways they can be resolved are very unclear, and so it means turning round Bill Clinton's famous phrase, "It's the economy, stupid." Actually, in these sorts of things, the economics is quite simple. It's actually the politics which is always the most difficult thing and the hardest thing to resolve, to find way through. And that's precisely why some of these deadlocks are so long-lasting and so hard to so hard to get through. So what are the political implications? There's a lot of talk about that in the current recession, that there's a shift to the right, and a number of people have argued that that recessions and depressions favour right-wing politics. But it's a little hard to know exactly why that should be so, since why the politics of austerity should necessarily favour the right, because the problem with any politics of austerity is that the longer it goes on, the harder it is for politicians of any kind to actually control it, particularly in democracies, because politicians love to deal in hope and expectations and raising expectations, and in the politics of austerity they're faced with clamping down expectations and disappointing hopes. And what does seem to be true of the present recession is that the radical options are being explored by the right, by right-of-centre parties, and quite why the right should be better at the left at the politics of austerity. It doesn't seem to me it's a law of nature. It seems to be something to do with the way in which left-wing parties have responded, and the way in which they have allowed themselves to be trapped within old forms of discourse. After all, there are some left-of-centre politicians in the past who've actually done very well with politics of austerity. In Britain, Stafford Cripps was no mean hand at a politics of austerity and at maintaining popularity. And of course, FDR and the New Deal is the counterexample which is always presented. So, and there's lots more that could be said about that, but perhaps we could take some of those points up in discussion. The three other points I want to make. One is that I think that one of the things this crisis will eventually lead us to do is to reevaluate neoliberalism. I think that the whole way in which the post-war period has been considered, namely as a period first of a Keynesian era, followed but then in the 1970s and 80s by a neoliberal era, I think that will become outmoded. I think neoliberalism is going to look very, very different as a result of this crisis. And what I mean by that is that I think that the whole post-war period up to 2008 will come to be seen as a period of a liberal international economy, of a liberal international order. And I think the big political question now is the future of this liberal economic order, and whether it can be sustained into the future. And that will be determined by what happens to the three great deadlocks in the international system at the present time. I mean, there's more than three, but there are three, it seems to me, absolutely critical ones for understanding this crisis and for the way in which it might develop. The first is the deadlock in the United States. The second is the deadlock in the Eurozone, and the third is the deadlock in China. And it is what these three deadlocks provide, what they create, is a risk at some stage of a major dollar crisis, a major run on the dollar. Secondly, of a Eurozone breakup, and that's the one which is currently very much in focus. And the third is of some kind of political implosion within China. And clearly what is going on with these deadlocks and what a lot of people have been commenting on is the potential shift of power from west to east. But everybody now assumes that this is coming, but the timing is enormously uncertain and the actual ways in which it will come about. And the UK in all of this is quite marginal. It's now more marginal than even than before within the European Union. It's increasingly marginal in relation to the US, David Cameron's recent visit notwithstanding. And the UK is also quite marginal in relation to China and India, quite a way behind some other European countries in fostering relations with them. And yet, these three deadlocks, the UK is going to be hugely affected by all of them. And it leads me to my final point, which is, if you look at scenarios then for UK economic growth, or where the UK is going to fit in to whatever kind of international order succeeds the present order, there's a lot of talk in Britain about Britain reinventing itself as a global trading nation, putting less emphasis on its trade with the rest of Europe, and instead reaching out to the new markets of the rising powers. But of course, a global trading nation strategy depends very strongly on the preservation of a liberal international order. And the question of a liberal international order is going to depend, it seems to me, very much upon whether some kind of grand bargain can be arranged between the US and China. And this is outside Britain's control. The second scenario, the second policy would be a Eurocentric policy, which would mean Britain cleaving again much more closely towards Europe and the Eurozone. But that would require two things. One is a rather unlikely change of public opinion and political opinion in the UK itself. And secondly, that requires a grand bargain within the Eurozone to actually make that possible. But it seems to me that I'm not sure there is a third one, but maybe someone else will think there is.
My brief was to talk about the UK debt crisis itself, so I will be returning us to pessimism very firmly. Although there is a debt crisis clearly across developed country states, the UK debt issues are quite specific in many ways when we look at them in comparative context, both in the nature of the problems and at least some advantages that the UK has in dealing with them. If we start with problems first and just some comparative facts. First of all, total debt, and I mean by total debt, state debt, household debt, financial sector debt and corporate debt, the UK is second only to Japan amongst large economy states in terms of the total debt. So it's the size of that total debt. Second, if we look at the rise of borrowing during the boom years, which I'm taking 2000 to 2007, the UK experienced the largest increase in total debt of the largest economies. And with Spain, it had the largest increase in financial sector debt during that 2000 to 2008 actually period. Thirdly, if we take the budget deficit, the UK deficit for 2012 is projected to be twice the Eurozone average. Of the other major economies, the two that also have large deficits, the US and Japan, have advantages that the UK clearly doesn't have. Japan has a high rate of domestic savings, and the United States effectively has a structural creditor in China, which has an incentive to continue to lending to the United States at low rates of return that don't really even compensate much of the time for the dollar depreciation. The UK simply doesn't have anyone who's going to lend money to it in the way in which China lends money to the United States. Fourthly, there's the size of UK financial sector debt. Of the total UK debt, nearly half of it, 43%, is financial sector debt. In absolute terms, financial sector debt is the highest amongst any major economy, and it's about 100% higher than the next economy in that list, which is Japan. Fifthly, let's look at household debt. This was static or falling during the 1990s in the UK, and then it rose rapidly from 2000 to 2008. Now amongst the major economies in the world, it's the second highest, second to Australia. So in terms of the other G8 states that would count in the largest economies in the world, that the UK has the highest household debt. Sixthly, overall debt in the UK is still rising. We take the end of 2008, UK total debt was 487% of GDP. By the middle of 2011, which is the last official figure that I could find, it's 507%. Financial sector debt is still rising because although bank debt has fallen substantially since 2008, non-bank financial companies have increased their debt since 2008. This might surprise you, but residential mortgage debt is still rising, although slowly. Seventhly on the list of problems, and the final one, is the level of exposure of British banks to the Eurozone crisis. The net direct exposure of UK banks to Portugal, Ireland, Italy and Greece is second only to France amongst EU states. Okay, let's look at a few specificities to the UK in advantages for a moment then. I think that there are four things that matter here, or how much they matter may depend over time. The first is clearly Britain and there are only a few other states that are now in this position amongst the large economy states, still has AAA rating with the credit rating agencies, and it enjoys low long-term interest rates. Indeed, if you did a correlation of the numerical relationship between the size of a state's budget deficit and long-term interest rates, the UK does better than any other state in this respect, because it has a rather high budget deficit and yet it has rather low long-term interest rates. Second advantage that the UK has is the average maturity of its debt. The average maturity of bonds, and I mean by this state debt, so UK government bonds, is 14 years, which is significantly higher than, or longer I should say, than other states. So the UK should have less difficulty reservicing this debt, or rescheduling, not reservicing, a better word, this debt looking into the medium term than comparable states. Thirdly, about 70% of UK state debt is domestically owned. This is in sharp contrast to France, for example, where less than half of French state debt is borrowed within France, and more than half of it therefore comes from abroad, and that particularly matters when it comes to currency matters and the currency risk in maintaining this debt over a long period of time. Fourthly, although household debt is high in the UK, in fact very high in comparative terms, and most of that household debt is mortgage residential debt, it is also the case that compared to other economies that had housing bubbles in the boom years, particularly to Ireland, Spain and the United States, which are the other states which had the biggest housing bubbles during these years, that UK households have less negative equity, or fewer households in the UK are in a position of negative equity than what is the case in these states. And the reason for that is that because although house prices were rising rapidly in the UK and during this period, the explanation for that is not simply on the demand side of it, but on the supply side of it too. So there wasn't a housing construction bubble in the UK in the way in which there was particularly in Spain and Ireland. That means that house prices have fallen less, which obviously has consequences in itself, but that also keeps households out of negative equity. If we think about possible strategies in general terms for dealing with any debt problem, there's basically 4 ways that states can deal with debt crises. There's 1, there's austerity. 2, there's default. 3, there's inflate it away. And 4, there's trying to grow it away. I'm not saying those in any particular order. Now, clearly, unless something catastrophic happens, default isn't going to happen as an option for the UK. Obviously, the most attractive for any state for dealing with a debt crisis is to try to grow it away. But if we look at that historically, pretty much every instance of a state growing its way out of a debt crisis involves having a commodity. I mean, Argentina dealing with the debt, its default post 2001, an energy project or war. None of these immediately seem applicable to the UK. Clearly, if we look at it in terms of the state dealing with its part of the debt, so the state debt crisis aspect to it, the UK has concentrated on option 1, austerity, with some option 3 thrown in of inflation. Although it's too soon really to tell what the inflationary impact is going to be of the quantitative easing that the Bank of England has engaged in since the autumn of 2008. But it's clearly the case that, I mean, as Colin was suggesting earlier, that the austerity strategy so far has yielded rather limited economic returns. The coalition government has made rather limited progress in its plan to eliminate the structural deficit by 2014, 2015. That almost certainly won't happen. And one of the reasons for that is clearly that the economy in growth terms has not recovered in the way in which was hoped. Obviously, there are multiple reasons for that. But clearly part of that goes to the problem of getting businesses to start investing again, and the problems that the Eurozone has created for any kind of export-led strategy for growth. What then might we say about the politics? And this is what of all this, and this is what I want to finish with. Clearly, it seems that there is I haven't said we're going to go to the politics, leaving the politics aside for one moment, there's clearly an economic problem which goes back to one of the points that Colin has made, is that there is no alternative growth strategy that has emerged out of this crisis. And the particular significance for this, for debt, is that the previous growth model was premised on both household and financial sector debt, and no strategy has emerged to replace that. Even when Osborne, in his early days, had higher hopes that what he might have thought of as his supply-side approach to rebalancing the economy was going to yield more jobs, he was still operating on an assumption on a budget that had household debt rising. There isn't even a conception of how you, even at the beginning, in his most optimistic mode, he did not have a conception of how the UK economy was going to start growing again without household debt continuing to rise. And as I've already said, financial sector debt has been still growing reasonably steadily since the autumn of 2008. Secondly, it seems to me that although we've had a government since the summer of 2010 that has taught the language of austerity and has established a narrative about austerity, that if you like, the wider political narrative or the wider political debate in the UK, and the substantive space in which a government that was truly committed to pursuing an austerity strategy simply doesn't exist. That there is a disjuncture between the rhetoric of an austerity strategy and what has actually happened in practice. And I just want to make a couple of points in relation to that. To finish with, health as a starting place. If you look at the breakdown of the rise in public expenditure between 2006 and 2009, a fundamental reason why Britain had its increased expenditure during that period isn't just the financial crisis and the consequence of that. It's the fact that health expenditure increased by about 20% in the period between 2006 and 2009. If we go back to the general election, the one area that the Conservatives and then what became the coalition government in practice ended up exempting effectively from its austerity strategy was health. The health expenditure has continued to grow since the coalition government came to power. No UK government wants to say that health spending cannot continue to rise in the way in which it does without fundamentally compromising the austerity strategy that this government says that it is committed to. I also think it's the case that much of the fiscal debate in the United Kingdom is divorced from the facts on the ground about the distributional conflicts at issue and how austerity is dealt with politically. I mean, just take as an example the ludicrously poor debate around the granny tax over the last few weeks. Even removing a tax privilege, because that is what we're talking about, the higher personal allowance for pensioners over those working, has been labelled as a tax increase without very much counter-narrative being established in relation to doing that. Doing austerity politics in the UK is politically seems extremely difficult. So none of the political parties are actually that committed to a serious austerity strategy to deal with the debt crisis, but none of them either seem to have an alternative strategy for dealing with it, either of the inflating it away or finding a way that would get round the seeming difficulties with the grow it away strategy. It is true that the rhetoric of the coalition government has earned it really, I think, in historical terms, extraordinary latitude in the bond markets in terms of having an austerity strategy that has actually done very little, and yet at the same time is allowing it to borrow at a very low rate of interest. But any analysis of the way in which bond markets have worked over the last 30 years is going to tell us that that could change extremely rapidly, and that at that point, I think that the UK domestic politics is quite unprepared for what comes next.
Thank you very much for the invitation to speak, because it isn't often we get to, someone from my perspective gets to speak to such an esteemed audience of academics, and so I'm pleased to be here to do that. I was very interested in, I did go to Queen's University and I have a degree in political science, believe it or not, but it was a long time ago, and some of the things are just passing through me at the minute. But I did like the analogy to the L-shaped recession, because I think in many ways that's what people on the ground feel that it's like. You know, it's a drop away. And I guess it depends on where you stand in terms of how you view recession and how it impacts on you. So Andy had asked me to do this when he told me that to approach it from a sort of frontline perspective in terms of where the voluntary and community sector in Northern Ireland see things. So I'm going to do my best to do that. I want to spend about 10 minutes just telling you about the challenges and difficulties facing people here. And the voluntary and community sector works with very many people who are struggling on a day-to-day basis to make ends meet as a result of the impact of the recession. For many of them, it's been like a perfect storm. It's, they woke up one morning and the landscape had changed, and people aren't very sure how they're going to get back out of it, and where the jobs and the growth and everything else is going to come. So I'm going to give you a wee flavour of that and tell you a wee bit about how the sector is engaging with our local politicians here to try to ameliorate some of the difficulties we see in a Northern Ireland context. Suppose some context, probably worthwhile telling you a little bit about my past. I lived through the conflict here and started my career as an apprentice sheet metal worker in Harland and Wolff, believe it or not. And no, I wasn't around when they built the Titanic, no. But many of you will know, of course, it's the 100th anniversary of the maiden voyage of that particularly doomed vessel. And obviously it speaks something of the kind of Northern Ireland psychology that we can spend a whole year celebrating in such failure. I didn't last long in the shipyard. And after serving my time, I became involved in civil rights activities, mainly working with local communities on welfare and housing problems. In one way or another, I've been doing that ever since, and I'm now Chief Executive of an organisation called Advice Northern Ireland, which is a network of advice and advocacy agencies which provide particular advice and support to many people in the community. And I'm only telling you that to make the point that there's, throughout the Troubles, there were very many people who were working in the absence, I guess, of genuine bread and butter politics, and they were working on welfare and housing problems to improve the circumstances of the local communities. Another way of putting that, I suppose, was that there was a fairly massive democratic deficit here throughout the conflict, and we had, English politicians flying in, sometimes Scottish ones, the odd Welsh one thrown in here and there, and taking decisions about a place where nobody was actually connected to. So, in many ways, the voluntary and community sector filled that kind of political vacuum and developed very sophisticated responses to the local difficulties that people were finding themselves in. And in a sense, if we hadn't have done that, I think things might have been much worse than they are today. So, as a result of all of that activity, I think Northern Ireland probably has the highest level of voluntary and community groups in any region of the UK. We've got about 5,000 active groups. And as I say, I think that's partially a legacy of the conflict. The sector at the moment, according to the latest research from the Northern Ireland Council for Voluntary Action, would show that there are about 29,000 people now working in the voluntary and community sector. Mostly low-waged, a lot of part-time posts, but nevertheless a significant number of people. That sector is now larger than our agricultural sector here. So where we are now in terms of the main challenges that we're facing today, we've obviously moved out of conflict, but we've many other deep and some fairly deep structural problems still to overcome. You have to remember we're in a society here where we still have a very deeply segregated society. 90% of Protestants and 90% of Catholics live in single identity communities. So we have a lot of work to do to overcome those issues. And some of the other problems that we have as an economy, I think we've about 28% of the population in Northern Ireland who are economically inactive, and that's the highest in the UK. 31% of our available employment is in the public sector. We have a very weak private sector here. Our productivity levels are about 20% below the UK average. And our private sector output has fallen significantly, with the construction sector in particular here bearing the brunt of that, with a 32% fall in output. We've had almost 39,000 job losses since 2008, and our claimant count saw the highest increase in the UK by 161% compared to the UK average of 106. Obviously our unemployment is still growing. One of the huge issues we see is the vast majority of the job losses affect our young people, with almost 25% of those on the register being unemployed for a year or more. And we think that's storing problems for the future. And I think that's a trend that's right across the UK. Where are our young people going to get jobs, to grow ourselves out of the problems that we're in? And we've got young people languishing around, and we've far too many people still coming out of our school system with poor literacy and numeracy skills. The other area, my wife told me to mention this because she's a particular bee in her bonnet, is about graduate unemployment. And we have an awful lot of graduates leaving college now with no prospects, and that's sad for any society, I think. and I have a son in that particular situation at the moment. We also have a prosperity gap, 20% below the UK average, and our much lower private sector wages. So there are other factors. We've had a hugely growing ageing population. All of these particular difficulties that we're facing into, and there are many, many more than that. I'm just giving you a flavour. From the street perspective, what we're seeing is that people are struggling, really struggling to make ends meet. My own organisation dealt with about 120,000 people last year with a variety of problems. Most significantly around social security, debt, employment, and acknowledge the contribution around debt. And this is debt that people have. We're seeing our debt action service last year dealt with over 5,000 individuals with debt problems, and a good number of those were increase in housing repossessions as well. So we have in Northern Ireland much higher fuel and food costs, and we're seeing increasing numbers of people in fuel and food poverty. It's actually food banks. We did a quick survey around our membership the other day, and about 1/4 of our membership are now providing food parcels for clients, and they're springing up all over the place. That causes problems. The whole issue of food poverty causes problems. We're going to force people into eating more unhealthy food. We're storing up problems for the health service when we should be thinking about preventative measures in terms of health and all of that. So we're forcing problems on families. One issue in particular, which is now starting to kind of, I would say, panic people, is the whole thing of welfare reform. And I was just noting that maybe we don't have an alternative growth model, but maybe one of the ways that we do have it is through crucifying welfare recipients. It might not be about getting growth; it might just be about restructuring the economy so that we have people who are not entitled to welfare payments and that sort of thing going forward. Welfare reform, I think, as we have a much higher reliance on welfare benefits here than the rest of the UK, and we have many different circumstances, such as fewer private sector jobs. We've no childcare infrastructure here, and there's no statutory duty to provide it. We have a large number of people with mental health problems and other disabilities, and that as well can be traced back to a certain extent of the legacy of the Troubles. And so, in general terms, welfare reform, I think, is frightening a lot of people. We're getting a lot of inquiries. We're doing an awful lot more appeals on employment support allowance. People are being forced off benefits. We've seen the whole thing about Tesco's forcing kids into Phil's shelves for no money and all of that kind of stuff. And those are the types of things that are coming through and creating a certain amount of panic. So it kind of takes me to what the voluntary sector has been doing to tackle some of these issues, and I think that we're really starting to make an impact on different levels and on different issues in terms of helping to shape the kind of society that we want through influencing our local politicians here to design policies that suit the particular circumstances of Northern Ireland. And obviously only those matters on which they have some control, obviously, because not everything's devolved. Indeed, there are many, including macroeconomic policy, in which our local politicians don't have any control. And there are others, such as welfare reform, that are devolved, but which they may radically want to change, but really can do very little about, because if they wanted to change it, they would have to pay for it out of the block grant. And what politician is going to be foolish enough to want to do that, given the welfare spend of 5 billion here per annum? It would take up the block grant, essentially. So there's little stampede for that, even amongst nationalists who may want to break parity in terms of some of these things. So the issue about welfare reform, parity actually highlights the role of the voluntary sector particularly well. Is one area in which we have been making some impact in terms of arguing for changes to be made to welfare reform legislation as it goes through our local assembly, which it will do over the next year, to ensure that it fits local circumstances. And regionalisation seems to be a policy that government seems to be following. It wants to create different regional pay structures. It wants things to be done different on a different regional basis. And our politicians have an opportunity to look at some of the things in terms of how they may work differently to what's given to them from Westminster. our sector has been very active in lobbying our politicians around the legislation on welfare reform. For example, around the administration, how we administer benefits, we could maybe do that differently. Maybe we could do it better. Maybe we wouldn't have to wait 150 days to get a housing benefit claim. Childcare requirements, maybe we can do something about that. Maybe we don't have to go as far in terms of sanctioning people who don't take a job. Those types of things that we can actually tinker around with, but we can't really change the system too much. In other areas, the voluntary sector has exerted its influence, and I think some of those have been the establishment, for example, of an older persons commissioner, a commissioner for children and young people. The sector were very involved in lobbying for that and got that. And we've also established, in general terms, very good working relationships with assembly committees, and indeed we service the cross-party committee on the voluntary sector. Our local MLAs are in constant contact with our voluntary groups, trying to understand the implications of proposed legislation or policies. And you know, I get calls all the time, have you scrutinised that piece of legislation? What does it mean? Could we have an amendment here? Could we do this? So they are trying to genuinely engage, I think. As chair of NICFA, that's the Northern Ireland Council for Voluntary Action, and I'm very pleased to hear that they're having an event here tomorrow with the Speaker of the House of Commons, John Burkhoff. So if you're around, you can get in and hear some of that. And NICFA has made tremendous strides in engaging in economic affairs and in preparing our sector through training and conferences and other events for our people to become much more engaged in economic debates, because I think people thought it was always the way up there. And we've been trying very much to get local charitable organisations and community groups involved in actually shaping some of that economic debate. And I think we're very well ahead of the game. We've established the first ever Centre for Economic Empowerment for Civic Society in Northern Ireland, which is made up of a range of stakeholders, including academics, trade unionists, economists and voluntary sector activists. Dr. Baker here is actually a member of that. Then the Centre will be advocating for the involvement of civic society in economic decision making, and its role is to scrutinise the programmes for government, the departmental budget and the impact, and we're particularly concerned about the impact on disadvantaged groups, because we tend to find that government goes around and picks the fruit of the low-hanging fruit off the tree, and it picks the easy targets, and those are often very much the most marginalised and disadvantaged people in our communities. And so we want to try to empower people to have some say about that, but also to scrutinise to make sure that that's not happening. And I think we're having some success. The Centre for Economic Empowerment is running the first accredited economics training course for community activists who want to better understand how the big economic decisions affect their communities. So there's a lot going on, and I think our sector has made a really valuable contribution, and we want to be in the economic debate. We want to actually be shaping that, and I think events like this are very good, and we need to do more of that. We need to make more connections between, you know, the academic world in terms of political economy and how people actually you know, are living their lives, and make those connections and make those things real. And I know that that does happen, and there's some great work going on that. So that's really all I had to say in conclusion. David Cameron says he wants to promote the big society, and he made a big announcement this morning about a bank and all of that kind of stuff. At least he has a bit of a vision for something. So whatever that means, I would say we already have it here in Northern Ireland, but I think what we're really seeking to achieve here is not the big society, it's the good society and the good economy, so that we can get a better, more inclusive and fairer society for Northern Ireland. So thank you, and every success in the rest of our conference.